Warren Buffett's interpretation of financial reports. Number 35. Total assets and the return on total assets. Add current assets to long-term assets. We get the total assets. Total assets will match total liabilities plus shareholders' equity. They must balance. That's why it is called a balance sheet. Total assets show how efficient the business is putting its assets to use. The company's efficiency is found with the return on asset ratio. Divide net earnings by the total assets equals return on asset ratio. Warren found high return on assets indicates vulnerability to the durability of a business. The lower cost of entry into a business weakens the durable competitive advantage. Sometimes more can mean less in the long term. Another business tip from Learn Accounting Fast. Next, current liabilities. What are they and what do they tell us?